To get his views on the budget and indeed Indian equities is John Praveen. He is a Managing Director and Chief Investment Strategist at Prudential Financial Investment Advisors, and he's there in Mumbai. John Praveen, thanks for joining us. This was a budget that some say lacked fiscal discipline, when fiscal discipline is something which is badly needed.
Well, I don't think so, actually. The finance minister did take some steps to try to bring down the budget deficit from 5.5 to 5.1, and then on to the target for the next year is 4.6, and then it's supposed to go down even further to under 4 in the following year. So I think they're moving in the right direction. Maybe if you're expecting a much bigger decrease in the deficit, maybe you didn't get it. But in terms of what expectations, the market's expectations, I think he did deliver, or maybe even outperformed expectations.
Well, I mean, surely it's unachievable 4.6 or even 5% next year in terms of this fiscal deficit, given higher energy prices on the one side. Then on top of that, of course, we've got weaker IPO market here. If there's going to be a privatization program, then there's going to be, of course, more debt on the balance sheets as well.
Yeah, but the assumptions that we are making here is that oil prices are going to rise even further, and that the IPO market is not going to recover. What I suspect is that once the tensions in the Middle East are going to stabilize, oil prices will probably come down to below where they were before this escalation of tensions. And then as far as the market is concerned, I think that there are some near-term negative factors that have battered the market, and these negative factors are probably going to ease over the next couple of months, namely high inflation, interest rate tightening, the corruption scandals, and the Middle East tensions. Once these concerns ease, I think the market will probably recover, and we should probably see some improved the market rising, and especially for those investors who have not who have been out of the market. I think this is a good entry point.
Oh, you think at the moment it's a good time to be getting in, but we can always get fresh scandals there, and of course we can have fresh tensions in a geopolitical sense too.
Yes, you're right. I mean, you can always have those negatives, but you can also say that some of those negatives could ease. So it depends upon how you're looking at, whether you're looking at the glass as half full or half empty. But what I expect is that over the next couple of months, we should see some resolution of some of these issues, and that combined with the reasonably good growth backdrop and easing of inflationary pressures should allow the market to rise further or for the balance of the year. In the near term, there are still some risks, but I think come second half, I think the market should rise.
So, John, where should you be invested? I mean, is it going to be typically, as the government has more spending on infrastructure, you should be looking at construction companies? Is that the sort of thing you're doing? Also, perhaps, as they're trying to modernize agriculture, is that another part of the stock market you need to be in?
Yes, I mean, clearly infrastructure is one, and secondly, the capital goods sector, especially those capital goods that are catering to the agricultural sector, like agricultural equipment and irrigation equipment manufacturers. Those kinds of capital goods should probably be the sectors that will probably do very well. Infrastructure, clearly, as we saw yesterday, the infrastructure stocks did quite well, so that sector continues to do well. And then generally the increase in income for the agricultural sector should continue to provide support for the consumer stocks. And then finally, on the banking stocks also, if the fiscal deficit is going to come down, that should take some reduced borrowing requirements, and that should take some pressure off of the banks.
Yeah, that's if the fiscal deficit does come down. What about the allowing now of foreigners to invest in Indian mutual funds? That could be supportive, couldn't it?
Yes, I think that is probably a potential game changer. I'm saying potential because I think that the devil is in the details. Some of the details need to be worked out about how foreign individual investors can invest, and then this So you have to make sure that there's no that all of you know your client issues and all are resolved. So there are some legal issues, and all of those things need to be resolved. But once that is done, then there is a possibility that this could open the way for foreign capital inflows from the individual investor side, not just from the institutional investor. One more channel for foreign capital to come to the country.
John Praveen, thank you very much indeed for joining us. John Praveen is there from joining us there from Mumbai, and he works at Prudential there, just getting his views as to what that budget yesterday means for the markets there in India. Of course, Indian equities have had a torrid time of it so far this year, the worst Asian stock market or benchmark index to be invested in since the 1st of January.